Today, the rise of the property realists. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour and with a little bit of philosophy on the side. Just a quick one tonight. Firstly, to draw your attention to the fact that on Tuesday at 8 p.m. Sydney time, I've got Veronica Morgan coming on for my DFA live stream. Now, I have to say, I think this is a pretty significant event because, of course, I am, by many people at least, classified as a property bear, although of course that is a bit simplistic, and in fact all I keep saying is you've got to get granular, you've really got to know what's going on a case-by-case basis and not be persuaded by high-level indices that probably don't mean very much at all. There are other people who are considerably more bullish. Now, I class Veronica as a property realist, and in fact she and I, when we chat, seem to have a meeting of the minds in terms of the critical issues that are facing the property sector. So it'll be a really interesting show, I think. It'll be live, of course, and you can join the YouTube chat and ask a question. We're going to get into some quite interesting areas, including, I think, what's happening to property prices, what people need to think about when they're considering buying property or selling property. And I think we'll also touch on the question of what is a property dog versus what is a property star. Veronica, of course, is co-host of the TV program Location, and she has assisted a bunch of people in terms of finding a property. So, interesting chat. Mark your diary. We'll see you there on Tuesday. Now, the other thing that I wanted to highlight tonight was a much more spooky conversation that the Prime Minister had in a press conference on Thursday. And frankly, I was pretty disgusted with his statement. I just wanted to go through it because I think it poses a pretty basic question. Either the Prime Minister knows that he's not necessarily telling the whole truth, or his view of property is as a property bull, and in that case, I'm equally as worried. So this was actually the transcript of a press conference. The journalists asked, based on the fact that home lending figures came out and there was a significant plunge in new credit growth. Of course, we covered this in one of our earlier posts, and it's no real surprise. We've been seeing this easing back in recent times, but of course this month, because of COVID, it got hit tremendously hard. And the journalist went on to say that, of course, this is at a time when interest rates are at a record low, and we've seen a couple of months of sliding house prices. So, question to the Prime Minister, have you any concerns about the housing market, and what can the government do to avoid a housing price collapse? Now I'm interested in the journalist's question because, of course, the fact is, because if you have a view that home price rises are good and home price falls are bad, which is, I think, what the journalist was signalling, then I think that's an interesting observation. I don't believe that's true. I think prices are way off where they should be based on long-term means. But look what the Prime Minister said. He basically said, well, the thing about the Australian housing market is that, quote, demand has always outstripped supply. Now, I must tell you that that statement is patently false. According to the last census, there was more than 1 million vacant properties available across Australia. And since then, another 250 to 300,000 properties have been built, and there are more in the pipeline. We do not have an undersupply of property. So that first point is just factually incorrect. And he went on to say, particularly in those markets which have been most heated, and we're talking largely about the eastern seaboard markets here. And he went on to say that the situation in Perth and Adelaide has been a bit different. But even down in Hobart, we've seen an undersupply of housing and oversupply of demand. And then he went on to say, and that has always been what's driven the housing market. No. What's driving the housing market is too easy credit lending. The household debt to income ratios are significantly higher than most other countries around the world, and the debt to GDP one is also very high. We have too much of total debt into the housing sector, which is why we've got high house prices. It hasn't been driven by speculative investor bubbles or speculative credit, things like that, which we've seen occurring in other countries. I'm astonished at that point. Yes, it has been driven by speculative investor lending. At one stage, we had nearly half of all new lending going to property investors. Of course, property investors now have just come away from the market, and many are seeking to sell. So fundamentally, we've had a frothy market, partly because of easy credit and partly because of property investors. And then he went on to say, and I think one of the problems about the commentary about the housing market is too often the analysis has appropriated the conditions of other places and applied them to Australia. And that application has been completely misguided. Of course, you're going to see a resistance, a concern amongst consumers during times we're experiencing right now. It would be surprising if we did not see that. But I think fundamentally, quote, the structural position of the housing market in Australia would tell a far more stronger tale in terms of their resilience. Well, the fact of the matter is that all of those key ratios in Australia are off, way off. And of course, the old argument about Australia is unique, different, and completely unlike any other market has once again, I think, proved to be incorrect. So I think this is another case where the PM is just leading us up a garden path. That's why he said, I welcome particularly yesterday the decisions by the banks to be able to continue to roll over and defer payments in relation to debts. That's important. That's one of the many changes that have been important to date and will be important later in the year. And we've been working through very similar issues. But I think it would be presumptive or a little premature is probably the best word to be making medium or even short-term forecasts about the Australian property market at the moment. Well, of course, those deferments, the banks have announced another 4 months, includes the clause that lenders will be required to speak to individual borrowers and assess their individual circumstances. And if indeed it's the case that they are structurally going to be unable to maintain their payments in a relatively short time frame, then other options, including sale and restructuring the mortgages, would also be required to be on the table. So in other words, this is not a free-for-all, just another 4 months holiday. It's the banks starting to get serious about looking at whether borrowers can service their loans or whether their incomes have been changed structurally. And if they have been changed structurally, making appropriate changes. That means it's quite likely that we're going to see a spike of property coming onto the market with a sense of needing to sell rather than choosing to sell. And that's a big deal. So I have to say, standing back, this particular statement from the Prime Minister really has let the cat out of the bag. If he really believes this, then I'm astonished because it means that he's not close to any of the real data that's there in terms of debt and those other ratios. And if he's just spruiking it, remember, of course, he's got strong connections with the property sector, and particularly with the construction sector, then perhaps that's more of an explanation. But even here, these statements are just so far from the truth as to be, well, astonishing. And of course, we will see what happens down the track, but my expectation is that prices are more likely to slide rather than not. But then, of course, I run scenarios because there are so many variations in terms of what may happen. And indeed, if you look at my current scenarios, which I updated last Tuesday, you can see that there is a path, potentially, to small home prices over the next 2 or 3 years. But actually, my expectation is that prices will slide. And depending a little bit on precisely what happens with regard to unemployment is obviously the key, as we've discussed on a number of occasions. The chances are that prices are more likely to slide. And in fact, the data that I'll be discussing in the next couple of shows will be showing some real examples of where prices have dropped. Because wherever you look, actually, that is the true current story. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.